Welcome back to Power Lunch. I'm Mike Santoli. Amazon getting crushed today and adding to a steep sell-off over the past couple of months. The stock now down more than 20% from its September high, shedding more than $200 billion in market cap in that time frame. It is on track for its worst quarter since 2008. So is Amazon's reign over retail coming to an end? We're joined by Ari Wald of Oppenheimer and Boris Schlossberg with BK Asset Management. Ari, there can't be too many very big stocks in the market with this exact profile, down more than 20% from its high, but still up 30% this year. Amazon is there. What does it seem like to you technically from this point?
Yeah, I mean, you hit it, Mike. Still up 30% year to date. Talk about the importance of starting point. Our take is that there's not a trading call to make here. I think that the stock needs additional time to stabilize, but we think it is fine for the long term and probably one of the better looking retail charts with the rest of that group really breaking down. I think what's important to note here is while the S&P 500 breaking below its October low, Amazon's still above it, trying to make this a higher low. That is a sign of relative strength that we'd like to see. Now, for levels, 1450 is one we're watching. There's a key retracement there of the stock's gains since 2016. Very open, what could continue to be range-bound consolidation over the coming months. But we still think this stock works for the long term. Bullish long term, near term, let it stabilize for longer.
Gotcha. Okay. And Boris, arguably if the stock did kind of overshoot to the upside on excited sentiment, I mean, do we have to see it overshoot the other way before you might get interested, or does it seem like this is a kind of a long-term secular play for you?
No, I would be interested now, but I would be interested in a very cautious way by simply selling puts, because I agree with Ari that it's going to have to consolidate and probably sort of churn for a while. But long term, to me, it looks like very much a strong buy, because we have to separate the Amazon, the company, from Amazon, the stock. Stock went on a parabolic run and now is correcting properly. But the company continues to operate on all cylinders. It's doing very, very well. And the thing that people always underestimate is that Amazon's new push into new businesses is usually very productive on a very long-term basis. They're going now into logistics business. People always forget that Amazon is its own best customer. They did this with AWS. They first simply did AWS for themselves. They did advertising for themselves. And all of that then they can roll out for services to others. I think they're going to do the same thing with logistics. First, they're going to use it for themselves, and they're going to get so good at it, they're going to be able to generate revenue going forward. So to me, Amazon is just simply an unbelievable juggernaut of execution, and I love it for the long term. But short term, the stock is going to wallow. So you probably just want to simply collect it by selling puts.
All right. Yeah, UPS and FedEx could explain some of the weakness in those stocks, too. Amazon's push in that direction. Thanks, guys. For more Trading Nation, head to our website or follow us on Twitter @TradingNation.
Short selling can help you profit from a stock's decline. However, because it involves unlimited risk, you must have a plan. First, screen for poorly rated stocks showing weakness versus the broad markets. Second, look for the stocks with the poorest technicals in that group. And finally, incorporate risk management techniques into your order to limit potential losses.